Clay Patton on the Rural Radio Network. Let's catch up with what happened in the weekly commodity trade now with Darrell Holaday, Country Futures in Frankfort, Kansas. And Darrell, coming into it, really, do we need to look anything past Friday where drastic selling engulfs much of the ag commodity complex?
Well, that's right. I mean, you've hit it right. I would say you could say there was some weakness certainly in the grain side of things at times during the week, but you could also say there was strength in the soybean complex. But, definitely call it somewhat of a sideways choppy market in the meats, and then Friday came and it was engulfed. I think that was the word you used, and that is correct. We were just onslaught of selling. I'm not sure that, obviously one of the problems on Friday is that you get in a day of a shortened trading day and you have less volume, and if you come in with a lot of selling or buying, you can move the market pretty drastically, and that's what happened. On the grain side specifically, start there, and that we saw some support early in the week in corn and soybeans. Brazilian weather had been hot, dry. Most that was pretty well documented, how kind of record temperatures in parts of Brazil in those drier central areas. And then as we went through the week, though, the pattern changed and did get wetter. They did start getting rain, but that was all expected. And I would say as a whole, maybe they didn't get as much rain as we at one time anticipated, but we continued to see some rain stay out there in the 6 to 10 day and 11 to 15 day. It goes back and forth. The market was under a lot of pressure, as you mentioned, on Friday. Up until Friday, soybeans had a significant gain on the week. As they ended lower on the week. Corn under pressure. Corn continues that we saw that corn, that East of March corn carry go clear up to 19 cents. We haven't seen it get that high since 2011 and 2008. That is never a positive sign. It's trying to do that to discourage December corn deliveries, which can occur on Thursday of this week. And so it just tells you that the market's got too much product on the front end, especially on the corn side. And the wheat market struggles because the world wheat price just continues to drift lower. So much for $270 a ton for Russia holding that line and not going below that. We're seeing prices well below that being traded. European prices went down, and the European values went down to new lows again this week for this move down. And it had just pressured the whole market because we run out of any optimism about any U.S. wheat exports, especially in the hard red winter or the hard red spring, just are lost as you continue to see the price well below the U.S. prices. And so that really was how we ended the week, on a pretty weak tone, backed up the soybean complex, the soybean oil, which had mounted somewhat of a rally from that low of 48 and 49, got up to 54 cents, just fell apart on Friday again in the low 50s. We saw 200-point losses in that market after strength most of the week, and that set the tone for a little lower across the board. December corn down 4 on the week at 463. December 24 corn unchanged at 511. January soybeans down 9 at 1331. November 24 beans down 3 closing at 1280. December Kansas City wheat closing at 602. Actually dipped below the $6 level at one time on Friday. Closed at 602, down 16. New crop July down 14 at 625. January crude oil down 61, closing at 75.29. So the somewhat choppy Monday to Wednesday on the livestock sector, and then went sharply low on Friday. As we mentioned, still seeing some panic selling cash-wise to some extent. I think continues to be disappointment that the cash is trading at a premium to the futures, and the futures just continue to go lower. I would say that there's a lot of talk about the supply of cattle. The bottom line is the cattle kills have been just right in line with expectations. Look at our numbers are down significantly. The beef production's down. But at the same time, we're seeing record high retail beef prices to the consumer in the month of October. What has happened to this industry? That's not only this industry, I would say the beef, the pork, I would say that's all the way through the grain sector, is over the last 3 or 4 years we've put a lot of cost between the wholesale and the retail trade. That really shows up in the meat side. And the point is, really, you can just look 2 quick numbers and they'll tell you exactly what the problem is. You have choice beef, wholesale beef hanging around the 295, 297 area. And really been between 295 and 304 for most of the month of October. Yet we had just reported, USDA did report that October beef prices were at record retail price levels. So why the spread? What happened? We just simply put too much cost in the sector over the last 3 to 4 years, and that's why inflation hurts commodities. In the end, people talk about an inflationary environment can be supportive. It's not. It's not a supportive environment because you build too many costs in. And if you think about the consumers responding to record high retail prices, and the producers complaining or the packers complaining that the wholesale prices are certainly a long ways from a record level. And you see that on the beef and the pork, and you see that in the poultry, and you even see it in the sectors of the grain market that we've just got too many costs that got built in because of the inflationary effect that we see on the energy sector primarily. So in the end, we were a lot lower. The market gave up ground. Cash gave up $1, $2, $3 lower throughout the week. We were lower, $1 lower by Wednesday, but on Friday, about any bid out there somebody would take, just to get cattle moved as a whole, and it certainly set negative psychology going into the next Monday. Same goes on the hog side, in that we saw a lot of pressure, especially on Friday from February on out. There's more and more rumors of significant hog producers are in financial trouble and are liquidating sows. We've been liquidating sows, but we may see another big round of liquidation go through this industry in the next 60 days, and that just adds to the problem and feeds the whole problem. As we continue to see pork exports struggle, beef exports have struggled. The pork exports are struggled because we really don't have much of a Chinese business, but the Chinese government was out this week indicating that their 42 million head capacity for sows is way too big and needs to be cut back. They got way too many hogs. That obviously is not a good sign for not only those in the pork industry trying to sell them more pork, but at the same time, those who are looking forward a year or two down the road going to try to sell them corn and soybean meal if they want to reduce that size of that herd. On the week, December cattle down 550 at 170 and a quarter. February cattle down 582 at 170.97. Once again, all those losses coming on Friday. The January feeders 219.32 down 918. March feeders 822 down 822 on the week at 222.72. December hogs 67.57 340 lower. February hogs 68.77 down 667.
And that again is Darrell Holaday, Country Futures, Frankfort, Kansas. Learn more anytime when you give them a call, 1-800-292-4038. That's 1-800-292-4038. Do remember, trade futures and options involve risk of loss. May not be suitable for all investors. Do consider these risks before investing.